You've probably heard that investing is a great way to reach financial freedom, right? Imagine having your money grow over time so you don't have to work so hard. To invest successfully, you need the right knowledge and strategies, especially if you're just starting out. It might seem really hard to make $1 million just by working, so today, we'll explore some effective investment strategies that are perfect for beginners. Investing might feel like learning a new language with all its complicated terms, but it's really just about growing your money over time. Think of it like planting a tree and taking care of it until it grows big and strong. Your investments could be in stocks, bonds, real estate, or even starting your own business. The goal is to make your money work for you, instead of just working to earn money. Let's dive into some popular investment options and see which ones might be right for you. 1. High-yield savings accounts. This is a type of bank account that offers a higher interest rate compared to regular savings accounts. This means your money will earn more interest. By example, if you deposit $10,000 into a high-yield savings account with a 2% annual interest rate, you'll earn $200 in interest after a year. But if you put the same amount into a regular savings account with a 0.3% interest rate, you'd only earn about $30 in a year. Tip: this is a safe and easy choice for beginners. Look for banks or financial institutions with high interest rates and no account maintenance fees. 2. Traditional savings accounts. This is a basic bank account where you can deposit money and earn a lower interest rate than high-yield accounts. Example: if you put $10,000 into a traditional savings account with a 0.3% annual interest rate, you'll get about $30 in interest after a year. A tip: good for keeping money you need in the short term or for emergencies. However, you might want to consider high-yield savings accounts to get more out of your savings. 3. Index funds. These are investment funds that try to match the performance of a specific market index, like the S&P 500, by investing in all the stocks in that index. An example: an S&P 500 index fund invests in 500 top US companies. If you invest $5,000 in this fund, and the S&P 500 goes up by 10% in a year, your investment will grow by $500. A tip: great for diversifying your investments without picking individual stocks. It's ideal for beginners because you don't need to guess which stocks will do well. 4. Dividend stocks. These are shares in companies that pay a portion of their profits to shareholders regularly. Example: if you own 100 shares of a company that pays $3 in dividends per share every quarter, you'll receive $300 in dividends each quarter. This gives you extra income on top of any profit from selling the stock. Tip: good if you want regular income from your investments. Look for companies with a strong history of paying dividends. 5. Roth IRA. A Roth IRA is a retirement account that lets your investments grow tax-free. You invest money that's already been taxed, and you don't pay taxes when you withdraw it in retirement. Example: if you invest $5,000 a year in a Roth IRA, and it grows at 7% annually, in 30 years, you could have about $380,000 without paying taxes when you take it out. A tip: great for long-term retirement savings. Start early and contribute regularly to make the most of the tax-free growth. 6. Real estate crowdfunding. This is a way to invest in real estate without having to buy a whole property. You pool money with other investors to fund a real estate project. Example: if you want to invest in a new apartment building but don't have enough money, you can invest $1,000 through a real estate crowdfunding platform and share in the profits from renting or selling the apartments. Here's your tip: good if you want to invest in real estate but don't have a lot of money. Make sure to research the crowdfunding platform and the projects before investing. 7. Robo-advisors. Robo-advisors are online services that use algorithms to manage your investments based on your risk level and goals. Example: if you use a robo-advisor and set it to a low-risk level, it will invest in index funds and bonds, helping protect your money while still making a profit. Tip: perfect for beginners because they make investing easy. Just set your goals and the robo-advisor will handle the rest. 8. Investing in yourself. This could be learning new skills, taking courses, or starting your own business. Example: you might take online programming courses on Codecademy or Coursera to improve your skills and increase your job opportunities. Or you could start a small business and invest time and effort into growing it. Tip: investing in yourself is the best way to open up more opportunities and increase your earning potential. Look into courses, certifications, and personal development opportunities to boost your skills and knowledge. Avoiding common mistakes is key to building wealth. Don't try to predict the market. It's tough to guess how the market will move. Instead, focus on long-term investments and stick to your plan. Diversify your investments. Don't put all your money into one type of asset. For example, don't invest all your money in stocks. Include bonds and real estate to spread out your risk. Be patient. Investing is a long-term effort. Don't panic and sell everything just because the market drops. Stick to your investment plan, even in tough times. In conclusion, investing doesn't have to be complicated or scary. With the right strategies and a bit of patience, you can grow your money and build wealth over time. Start with basics like high-yield savings accounts and index funds, and explore other options as you gain confidence. The key is to stay consistent and keep learning. The more you know about investing, the better you'll be at making smart decisions and reaching your financial goals. Thanks for watching the video. If you found this video helpful, don't forget to hit the like button and subscribe to the channel so you don't miss out on new videos about making money online and investing. See you next time.